Wow, it's been an insane week in the market. We've seen some huge sell-offs in some of our favorite companies like Tesla, Apple, NEO, PLTR, and much more in the market. We saw SPY and the triple Q falling off massively. And of course, the little guys, me, you, and all the retail traders are taking huge beating and might be panicking. Well, I'm here for you guys to reassure you guys and explain to you guys what my plan is going into the market. Of course, our name is small players here, small players, because we care about the small players. The hedge funds and all the big guys obviously are profiting off these market sell-offs like crazy, and this is when those big hedge funds make the most money during market sell-offs like this. And us, we start panicking, and we might be losing our life savings, we might overreact and start selling off, and the big hedge funds start taking care of that and buying out all the dips, and they're profiting. So what is our plan going into this market correction? Well, first of all, the market is only corrected about 2%, 3%. The overall SPY, the QQQ is a little bit more, but these are all corrections that are not to be freaked out about. It's all within the normal range of what the market is going to go up and a little bit down, up, then the long term a little bit more down. So all of this, I want to be here for you guys to reassure you it's nothing to be freaking out about. It's not a bear market, it's not a crash, it's nothing like that. First of all, a bear market is should be a crash of over 20% of the market. We're not even at 5% so far, so sure, some of our companies that we love like Tesla's under 30%, but the overall market is not, right? And also, we just got in today, as I'm recording this video on Saturday, we just got in that the new stimulus news get passed, so that should help out the market a little bit on the shorter term. I still think we might fall a little more. If you guys remember, on our February 15th weekly newsletter that we had sent out, we expected this, the 390 level on the SPY being a really strong resistance level, and we took a lot of profits on our short-term swing plays, not our long-term investing. And if you're not part of the newsletter, go check it out down the link down below, and we'll also load it in our Discord chat. If you want to be part of a good community of traders, feel free to come trade with us live every single day, and the Discord link will be down below just as well. So what is our plan going into this market sell-off, this market correction? Well, first of all, we got to talk about the hedge funds. What is the hedge funds and the big guys going to be doing in these market sell-offs? Well, first of all, they take advantage of our euphoria. So they're profiting on our euphoria and they're profiting on our panicking. Just like you FOMO, that when the stock is really high up and you feel like you're missing out, you want to jump in. That happens the same way when the market is selling off. When you see a lot of Tesla selling off, people start panicking. The opposite of FOMO, saying that they're dropping out so fast, they want to get out just as well, just to find out that maybe if it held just a little longer, they would have been just fine. Well, I see a lot of that happening right now. If you're in a long-term investment, like you might be invested long-term in Apple, you might be invested long-term in PLTR, whatever stock that you did your due diligence that you think is going to do really good long-term, and you think it's really good for you to hold in your portfolio as a long-term investment. I think that this market corrections, market sell-offs, even crashes give you a great opportunity for a long-term investor to get back in, start buying the dips more, set up certain levels that you might think it's a good support level to get back in, to start averaging down your position, so you get better average for long-term investment to add to your position, so it gives you more leverage over the long term when you finally decide to sell off years ahead. This is what my approach is with companies that I like to hold in my portfolio. Of course, some ETFs just as well. The ARK ETFs have been taking huge beatings, and I really like those ARK ETFs, so I might invest a little more in them. That's just my personal plan. You go along with any stocks that you might be interested in. But I'm just here to tell you guys there's nothing to freak out about, okay? It's nothing to panic about. Just, yeah, of course. Yeah, can it fall more and crash? Sure it can, but do I predict it to? I definitely don't. I think it's a great correction, just like we saw it happens. Usually correction happens 2 times a year, in spring and the fall. Just we saw last October, November time, there was a correction. People panicking, predicting a crash, the whole COVID thing again. That didn't happen. It just gave a lot of good entries for long-term investors and a lot of good overreaction plays for the market. But I'm here to tell you guys that the hedge funds, the big guys upstairs, they're good. This is the time that the profit is shaking off the little guys like us, us panicking, the people that may have more invested than they should in the stock market, people that may have read something on Reddit that they shouldn't have read and went in all in on a play that they maybe shouldn't have, people that have bought options contract, not knowing how to trade options, that have their contract expiring soon and losing so much money off of them. These are the times that those big hedge funds are taking advantage of us. So we gotta do our own due diligence. We gotta have a plan. We gotta be ready for moments like this, because the market sure might be down a few percent, but it's really not that bad. The year of 2020, after the COVID crash, when people made money because we saw such a good V-shaped recovery. These are not, most of the time the market will be like this, up and down, up and down, up and down. You guys might have heard me talk about Fibonacci retracements a lot of times, because those really help if you're a new trader. Plotting out your Fibonacci retracements will really help you with understanding support and resistance level in the market over the long term. And I believe all of those are things you need to do, as well as your due diligence on certain stocks, on taking advantage of this market correction. Don't let the big guys, the big hedge funds, take advantage of us. They do that, they take advantage of the little guys that are not educated enough. They may not have studied the stock market as well. They have, think about the hedge funds, they have almost a limited amount of money that they keep investing in, can keep lowering down their average. They've been doing it for so long that a lot of their averages on a lot of these companies are really low anyway, so they're only losing a little bit, and they get to add more to it. They have a fleet, an army of people that are from Harvard, Berkeley, all kind of Ivy League schools that can decide what to do for them. So it's hard for us to compete with them, but we gotta do it some way or another. And the best way is for us to focus on our little lane, our little strategies that we have, and stick to them. Also, day trading is a really good strategy for if you're scared of holding anything overnight and holding anything that you don't want to see fall, in case we're having a retracement or a correction or bear market, whichever it is. Day trading is actually one of the safest way to do it, because you take it day by day, you play whatever the market gives you. If, for example, on Friday we had a great day trading penny stock eyes. It had FDA approval, so it was on our calendar that we stocks that we're watching. We gave us a good entry for us to trade and sell within the same day. Same thing, the market selling off. We played a lot of puts in our options chat as well. I know day trading is not for everybody. People have school, people just want to long-term invest, dollar cost average, and it's completely fine just as well. And just know, I just don't want you to panic if you have invested too much that maybe you have your life savings in it, you were banking to make some extra money and you couldn't afford losing it, so you had to panic, sell everything. I'm just here to remind you guys that that's not how you're supposed to trade. If you're supposed to trade with money and invest with money that you shouldn't really be able to touch, just in case you get things like this. So it could be a reality check for a lot of traders. We have gained so many traders in 2020 because people got really excited about the market and everybody was doing so well. And some of the newer people just came in, they're like, what the heck, the market is selling off, why am I losing all this money? And we have to go train them and explain them all the things I'm talking to you guys about. So I don't want you guys to make the same mistakes most people make, is don't panic right away just because the market is selling off just a bit. It's all part of the market, is what the market does. You guys, if you were an investor during March times, that people were completely freaking out and they lost a lot of money. If they just held longer, it would have been fine. As I'm saying, they're long-term investments, not a short-term investment. If you're trading a penny stock that's supposed to be bought and sold the same day, you're not supposed to hold in that. I'm just talking about here strictly on the long-term investments. Well, if you talk to anybody that was trading during March, those were crash times that you really need to work on your emotional IQ to really handle all the market selling off, because that was a full-on crash of something that nobody had predicted before. This is just a complete normal correction that I see nothing wrong with. I see actually great opportunities for a lot of people that haven't been able to get in the market to potentially dip buy. But of course you want to have a plan when you do that, because it could keep selling off, it could keep retracing. So you want to have slow, you never invest. If you want to long-term invest into a company, you don't just do it all at once, you do it little pieces by time, and you want to make sure it's a company that you really believe in, you really do your research on. Our general rule of thumb is that you need to do at least 4 hours of research before investing in any company, just to make sure their balance sheets are good and their your future projection is good. If you don't want to do that, pay some investor to do it for you, or just give it to your bank to invest for you. Don't go and invest in yourself. And for us day traders, the volatile times like this are perfect for us. It gives a lot of good opportunities to play our short-term plays to really good volatility, both on the long side and on the short side. Also remember that stock trading is not a game of mathematics, it's more of a game of emotions. The charts are just a representation of people's emotions, so we gotta be able to handle these emotions and trade like we're pretty much robots. If you trade like a robot, you don't have to panic sell or FOMO into anything. The most of the people's mistakes are when they let their emotions take over. They just they see it's hard seeing a lot of red. Maybe you have your life savings, maybe somebody wants to retire and your 401k is so much more down than it was last week. It's hard, and it's obviously something that feels bad too, but you gotta be able to handle your emotions, because the stock market is a free market and anything can happen at any time. So we gotta be taking it with a grain of salt, everything that happens, and we gotta be ready for every single thing that can happen. So when you're planning a trade, don't expect that every single trade is going to go well. you should plan for if it goes well or if it goes bad. Every time you write out your trading plan for any stock, you swing trading, a day trading, and scalping it, long-term investing, you should have your profit targets, you should have your stop losses. You know, if you're active trader, I think that you should be able to take profits in your swing trades. So let's say you enter stock and it goes up a certain amount, you should take some off, because you know you caught most of the moves. You gotta expect a pullback. Stocks don't just go up like you might have heard otherwise. Stocks go up, stocks go down, they go sideways, all kinds of ways. You know, the trading ranges in channels. Some news might hit that, you know, makes it break down or makes it break up. A lot of things can go wrong, a lot of things can go right. So you always gotta be ready for both sides. You also gotta separate your long-term plays to your short-term plays. For a little quick recap for this week, you know, we traded ICE, which completely blew our expectations out of it, and we were ready to take advantage of the whole move. We entered our first entries on 250, we took profits on the way, and the stock hit a high of 10. Those plays, you know, they're short-term plays, so we trade them, we buy them and sell them within the same day, so we don't hold them overnight. And you know, we keep our short-term plays separate from our long-term plays so that we don't get over emotional if the long-term plays are down, and we can still fully take advantage of the short-term plays. So if you want to trade with me live and see all of my trade plans I share live in our Discord community, just check out the link down below. And if you want to follow us, you know, if you want a beginner course that you know, want to invest in your education for trading, feel free to check out our full beginner course. It also gives you access to 3 months in our Discord chat. So this is a quick market update. I'll be uploading more. Leave the questions down below on stocks that you might want me to talk about on Sunday for our Sunday stock talk, and which stocks you are looking at to get in. So I'll see you guys all in tomorrow's video, and peace.